consumers, with individual people, so that you have an understanding of what's actually going on. So the presentation I'm going to cover today, give me 1 second. I'm going to share my screen.
You're good. You're sharing.
Okay, let me just pull it up then. There we go. Okay, this little presentation is called "Give Me a Little Credit," a little tongue-in-cheek there. But really, what I'm going to be covering is what's going on that credit report. This particular presentation is one of two. So we're going to be doing the basics, which we're going to cover today, and I believe next week we're going to be doing credit 102, more advanced concepts, tricks, and tips and tricks of things that you're going to want to know, as well as going more into the COVID situation, right? The CARES Act and how that's affecting your credit, et cetera. So tune in for next week's presentation as well. You will be getting additional information and going more in depth. But today I'm going to talk a little bit, like I said, about the basics. I find that, there are different levels of understanding of credit, but for the most part, I would say a good portion of the US population really doesn't understand how this works. So even if you have some experience with credit, we're going to kind of cover all the basics. And if you're absolutely new to credit, perfect, because we're going to be talking about it from the ground up. Before I do move on, I do need to read this disclaimer, right? So the lawyers are happy. The purpose of this presentation is to help you better understand credit reporting and to provide general information about how you can manage your credit report so you can get the credit you need and want. For legal reasons, I cannot discuss issues specific to your personal credit report, and I cannot advise individuals on how to improve their personal credit report or credit scores. I cannot submit disputes regarding your personal credit report on your behalf. Information regarding Experian policies and processes is current as of the date of this presentation, but may change. Basically, what we're saying here is that I don't have access to your credit report, so I can't change it. So I can't, resolve anything for you, but I can definitely talk about the things that are going on. So we're going to cover today what is credit, right? Credit itself is not related to credit reports or credit scores in such a direct way, but I want to describe what credit is and how it differs from a credit report and how it differs from a credit score. Those are the basic concepts. I'm also going to explain how credit information is collected, how long it remains on your credit report. That's always a big topic. We're going to talk about who can access your report and how you can access your own. There are actual websites that you can get your own free credit report. We're going to talk about that. But we're going to really understand what is the purpose of credit reporting? How does it fit into our lives? Why do you want to keep a good history? A lot of people see this as a mystery, but once we kind of unravel that mystery, you will start seeing that this is something that's really worth taking care of, right? For those of you that are students, you worry about your grades. You keep your grades up. It's something that you know you're going to benefit for keeping your grades up. Well, in the same way, you need to keep your credit history robust. You need to keep your credit score up, and there are definite benefits to that. We're also going to talk a little bit about how to build credit, how to use credit and manage it, and build that positive credit history. And then finally, I'm going to show you where you can get more information. There's no possible way that I could cover every aspect, every topic, but we do here at Experian provide you with a lot of information. We have presentations, we have brochures, we have blogs, we have videos. I mean, there's all kinds of information that we want to help share with you. Also, it's very important that you make sure that the information you get is from a credible source. Okay, don't believe everything you see on the internet. Make sure that whoever's offering this advice has the credentials for it. All right. And by the way, please feel free to use, I believe it's the Q&A box, or is it chat box? I'm not sure, but please let us know what your questions are.
Yes, okay. Definitely. And I'll be monitoring those. So definitely throw your questions in the chat. And then when there's a good time, Veronica, I'll just break in and let you know if they're
perfect. Excellent. And yeah, there are no silly questions. Please, this is our opportunity to clear the air to make sure you understand this as well as you can. All right. First step, let's talk about what credit is, okay? Because credit is not the same thing as a credit score, all right? Credit, by the way, is also not the same thing as debt. I hear it all the time from people, oh, I don't want credit. I get you into trouble. Okay. Now it's debt that can get you into trouble, and specifically not paying your debt that can get you into trouble. Credit is actually the positive end of the debt relationship. It's basically building up a credit history so that you can get services, loans, better rates. I mean, there's all kinds of great things that you can get with credit that you need a credit history for. Think of credit as your financial references, right? So as a student, you have your transcripts. Later on, you're going to have your personal and work references. So when you apply for a job, you'll be able to submit to this person who doesn't know you a little bit about you. Well, that's what your credit history is. It's your financial references. For a lender that knows nothing about you, it's a way of showing them, hey, this is how I manage money. This is how I manage my credit report, or my credit accounts. I pay my bills on time, that sort of thing. Reason you want this is because most lenders, it's rare that you're going to be getting a mortgage or an auto loan if you don't have any credit history. And we're going to talk about how to start credit, of course, but in order to do these, to build your financial future, okay, at some point you might want to start your own business. You might, need a lease, you rent a car, get a mortgage, all sorts of things. You need credit history. You need to show them how you pay your bills. Also, even for something as simple as when you sign up to get your own cell phone service, right? Now, some may be on your parents' cell phone service, but at some point you're going to want your own. They're going to ask you for your credit history. They're going to ask to pull your credit report. When you apply for insurance, they're going to ask for that. So it's definitely something that you want to build and to have. Also, to give you guys a little bit of background on how credit and credit reporting works, within the United States, there are 3 major credit reporting agencies, also called credit bureaus. You probably are familiar with some of these names. They're advertised, and for some of us that are older, you will recognize these names for sure. The one name that you might be missing for people at least my age, way back in the day, Experian used to be known as TRW. So it was sold and it changed names, but it's essentially the same credit bureau. These 3 companies, and we are all independent, by the way, we do not work together. We are competitors of each other, in fact. We all 3 collect this data from lenders. Lenders send us the account information and the payment history and all that from each consumer that they have relationships with. And the 3 bureaus essentially collect that data, organize it, and then make it readily available to other lenders so that they can take a peek at somebody's credit history. There are many, many benefits to credit reporting, but I will tell you right now that without it, it would be almost impossible to get a loan. Back in the day, long before all this, before credit scores and readily available credit reports, the way you got a loan was you went into your local bank, and if you had a nice long relationship with them and they knew you and you had your accounts with them, maybe they would issue you a loan. But now in the days of instant credit, you can get a credit card by applying, and within 5 seconds, they can approve you. They can issue you a credit line. Things, especially now with everything's being done online, you could even get a car loan. Any kind of loan, you can do it instantly, but that's only possible with credit reporting companies storing this data and putting this data available so that systematically you can be evaluated for your credit worthiness. In countries that do not have credit reporting companies, loans are very, very difficult to come by and almost non-existent. So the fact that here in the United States we have this is one of the reasons why we have the economy that we have, that people can take out loans, people can buy homes with mortgages, they can finance their own education, things that are not available elsewhere. So as far as I'm concerned, it's a pretty good thing. The way, like I said, we keep this information, we store it, we organize it, we make it easy to understand and to digest, and we organize it so that other companies, by the way, they're like financial companies, can essentially check out this information, kind of like if it was a library, right? Experian and Equifax and TransUnion, the bureaus, we don't write this data. So we're the library that stores the books. We're not the authors that write the book. Okay. we actually get this information from lenders. Lenders will, banks and credit unions and other lenders, they send us this information on a usually monthly basis. And then we take that information in, organize it, like I said, and then prepare it so that others can also see that information. But be aware that you can only get access to this information, this credit data, with what's known as permissible purpose under the law. What that means is that it's not possible for just anybody off the street to come in and check your credit report, okay? If you're curious about someone, you can't just run their credit report. You don't have permissible purpose. Very few companies actually do have it, and it's all done through a very legal process. So let's talk a little bit about who has permissible purpose. So when you apply for credit, when you're signing that credit application, it could be for a student loan, it could be for your car, credit card, whatever. As you're filling out that application, there's usually a section at the bottom that has the fine print, right? Whether you read it or not, most of the time, those applications say that you are giving that lender or that institution permission to view your credit report. That's in there. You are literally giving them the permissible purpose to check your credit through that application. You will see that it's also in insurance applications. Sometimes it'll be in job applications. Not always. Not every employment process requires a credit check. But if you're going to be working with money or in certain kind of high responsibility jobs, they might actually put it in the application that says you are granting them permission to check your credit report. But for the most part, you are giving the entity permission to look at your credit report. But it's not only driven by you, okay? Primarily it is, but there are some other situations where a company could look at your credit report for other purposes without your direct permission. And that includes things like offers of credit. Now, there are a lot of strict rules around that, but if you ever received either in the mail or maybe, through emails, you receive an invitation from an institution to apply for credit, right? Come and check out our credit report, or our credit card or something else. Those offers of credit, the way they know that you are you is because they come to us and look at your credit report and determine whether or not you meet their criteria. And if you do meet their criteria, then and only then do they get your name and address or phone number, as long as they promise to actually send you that invitation, right? To actually mail to you or communicate with you and offer that loan. So that is one way you can get that somebody gets a permission to look at your credit report that you don't issue. Obviously, court orders, subpoenas, and things like that, we are required by law to give them credit reports if it's required by law. And for some types of licenses, you will also need to be able to pull a credit report. But this last bullet here, the disclosure to the consumer, what that means is that you have the right and permission to check your own credit report. Notice that I said your own. You're not allowed to pull other people's credit report. And by the way, this is just kind of something for you to know. A lot of times you can pull credit reports directly online. It is illegal to pull somebody else's credit report, even if you were able to answer all the questions. So let's say, for example, you could answer your children or your spouse's information. It is not legal to pull somebody else's credit report. You are essentially committing fraud. So you can only pull your own credit report through some of these websites. Just be aware of that. But that disclosure to the consumer basically means that you have the right, and we will even make it fairly easy for you to pull your own credit report. You should be checking it. We want you to be checking it. You're the one who can tell us if there are errors in it, and to help clean up that credit and have the best possible credit report. So you are also permitted to check your own credit report. All right, let's talk about credit reports and why they are important. All right, so we mentioned before that this is a collection of all your credit history, every account that you've ever had, from the very first one to the very last one, whatever you have, who issued the loan, what kind of loan, what kind of credit limit you have, what are your balances, are you making those payments on time? We're going to talk a little bit about how a credit report is structured, but that's really what it is. And throughout this presentation, when I say credit file, credit history, or credit report, I mean the same thing, okay? It's that collection of data that we have, and then that other people can look at, you can look at, to see all the record. Think of it almost as like transcripts, right? So you're looking at your own transcripts for school and your grades and whatnot. Think of it in a similar term. That's what it is. It's a collection of all your credit accounts and the history on those accounts. And then we organize that data so that you and other people can take a look at it. By the way, we also not just take information from lenders, we also receive information from courts. We're going to talk about that in a second too. Public records are also something that could show up on your credit report, or at least certain types of them. Okay, why is this important? The primary reason is that without credit history, it is going to be very difficult for you to actually get loans, especially bigger loans such as auto and mortgage loans, and some other things. You'll probably, if you ever applied for student loans, if you're getting a student federal loan, many of the loans do not require credit history. It's actually an interesting and easy way to start your credit history is by taking out a student loan. And many of you whose first loan is a student loan, that's how you got your credit report. But in general, when you're looking for other types of loans, you will be required to have a credit history. Sometimes some lenders, we're talking about this when we discuss how you can build your credit. Sometimes there are things like secured credit cards. Retail cards will sometimes give you your first credit card, but for the most part, most lenders are going to require something from you as far as credit history. If not, you could be charged additional money in the form of deposits. You will have to secure these loans with other aspects as opposed to unsecured loans, which are always better to have. You could be turned down for credit. You could be turned down for an apartment or something like that, simply because you don't have a credit history. So having this definitely is worthwhile. Also, having a good credit history, good reports on your payment patterns and your debt load and all that, that will most likely lead to better terms. What I mean by that is you can get lower interest rates, lower fees, lower, higher credit limits. If you've got fantastic credit, you're going to be offered a lot of these really great loans with really good terms. Especially as you get older and you start, building this fantastic credit history, you're going to start seeing that those offers start getting better and better. So it really is important for you to keep track and build its history and keep it in good shape. Also, you'll get, utilities. Remember, utilities can ask for deposits if you don't have a credit history or you have a poor credit history. They could charge you up to a few $100s sometimes. Basically they're securing the fact that you're going to pay them. They ask you for some kind of deposit to secure against. So clearly, it's definitely something that's worthwhile. Do be aware that the information that comes from, as I was saying, that lenders send us the information on your credit history, but the way they get it is that information comes from you. You actually initiate this entire process by applying. When you're filling out that application for credit, for an apartment, for insurance, for anything, when you're filling out that form, you're giving your name, your address, sometimes it'll be social security number, all the information. So make sure that when you're filling out those applications, you're consistent and you are thorough, because what we want to do is make sure that we're building that credit history with the right information. Okay. So let's talk a little bit about what a credit report looks like. Hopefully, many of you have already seen your credit report. Last year, when I was actually in Boston, I was at one of your fairs, and I would say, gosh, maybe 100 of you students had come up to me and started talking to me a little bit about their credit. And I asked each and every one of you, have you seen your credit report? Almost everyone said yes. But when I asked them about it, I realized they hadn't seen their credit report. They saw their credit score, and they were, kind of mixing those up. When I say credit report, I'm talking about the long history. Well, maybe not long. In your case, it might be short, but it's still a history. Credit report is usually a multi-page document that has at least these 5 sections. Okay, whereas a credit score is simply a 3-digit number that represents your propensity to default. We'll talk about that in a second. So there is a difference between a credit report and a credit score. The report is the long document. Think of it almost, it looks very similar to kind of like school transcripts, right? Multiple pages of historic data. And depending on where you get your credit report, it will look different, but they almost all have these 5 sections. The top section, the identifying information, we also call it the header. That has your name, address, social, phone numbers, sometimes employer. This is information to make sure that we are dealing with you, right? There are lots of people who share your name. So we need more than just, John Smith's name in order to pull your credit report. We're going to need your address, your date of birth, perhaps your social security number, something else to identify you as you. Because remember, we don't want to start mixing these up. We don't want people's information to get crossed over. So the identifying information provides as much info on the individual to get down to one single person. You cannot be declined. You will not be declined on this information. Lenders are not allowed or not permitted by FCRA rules to decline you on your age. Well, I shouldn't say that. They can decline you if you're under 18, but that's from a separate issue. But if you are an adult, they can't say, "Oh, we don't want to lend to anybody who's over 60," for example. That's not permitted. Or they live in this neighborhood. We're going to reject them for that. Demographic information is not allowed to be used in credit decisions. You need to use what's known as the trade line inquiries and public records section. That's the next section in the credit report. The account information. This is where we store the info for your accounts, whether it's a student loan, whether it's a credit card, whether it's could be a utility account, could be rent. By the way, sometimes rental places will report to the credit bureau. Not always, but they do. The account information, like I said before, has the name of the account, what type of account is it? Is it a credit card? Is it an auto loan, student loan, whatever? It says when it was opened. It tells you what the balances are, what your payments are, all kinds of information on that account, and it will be listed out. And of course, very importantly, it will tell you whether or not you made your payment on time every month. The next section, the public records section, at this point only has bankruptcies. We used to have other kinds of information, but that was purged. At this point, for the 3 bureaus, public records section only includes bankruptcy. So if you ever requested through the court to file a bankruptcy, it will show up on your credit report. They are not good things to have. They will literally destroy your credit score, and usually for a long period of time. Bankruptcies stay on your credit report longer than other negative information. They are more devastating. It's not the kind of thing you want to do. Bankruptcy is a very, very last resort type of a situation because it will mess up your credit for a pretty substantial period of time. I've talked to many lenders, and in many cases, they won't even look at anyone who has a bankruptcy. In other cases, it's got to be a long time since your bankruptcy, if you ever had one. But it's difficult to rebuild after one. So, at all costs, avoid it if you can from a credit perspective. The next section of your credit report will list all the inquiries. By law, anytime anyone looks at your credit report for whatever reason, we have to record it. So whether it's you applied for credit and somebody pulled your credit report, we will write it down. If you look at your own credit report, we will write it down. If one of your lenders looks at your credit report, we will jot it down so that when you're pulling your own credit card, you can see everyone who's looking at your credit history. Not all inquiries have the same impact, right? You probably have heard somewhere that, oh, inquiries make your score go down. That is not necessarily true. Most inquiries are actually what are called soft inquiries. For example, when you look at your own credit report, or when somebody's looking at your credit report in order to give you one of those pre-approved offers or invitations to apply, or when your lender to your own account is looking at your credit report on a monthly basis. Those are soft inquiries, and it doesn't matter if there are pages of it. It does not affect your score. The only inquiries that affect your score are what are called hard inquiries. And those are the inquiries for when you submit for an application, you're applying for something, and then that lender goes and checks out your credit report for that purpose. that will be a hard inquiry and does impact your score. But by the way, it doesn't impact it a lot. If you do a lot of inquiries in a short period of time, yes, that can help. That can start driving down your score. But generally speaking, it is not the most impactful thing on your credit score. We're going to talk about that in a little bit. But just be aware that while it is important to kind of control the inquiries, you shouldn't be getting a ton of credit or applying for a lot of credit in a short period of time because it can affect your score. For the most part, it is not the most important thing on your credit history. Okay, the last section of almost every credit report that you see will be how to dispute. Instructions on how to contact the bureaus or your lenders to correct anything that is wrong. So you're looking at your credit history, you're going down, you say, yep, this is my account, everything looks good, or, oh, that is not my account. I did not open this account. Maybe somebody fraudulently opened an account in your name. Or perhaps it is an account that you do recognize, but it says that you were 30 days late. And you say, no, I'm not. I was never 30 days late. Those are errors that you need to go back to your lender, or you can go through the bureaus, and I'll explain that in a second, to get this information cleaned up. I will, caveat that says you can clean up information that is not true, that is not accurate. You can't clean up information that you just don't like. Okay, so you can't just say, oh, I wish I hadn't been late on that credit card. That's not the kind of information that would be disputable, right? It has to be incorrect information. And and by the way, it's a lot easier nowadays to dispute information than ever before. It used to be really difficult. I remember the first time I did a dispute, it was back in the 80s. That's how long ago it was. And it took like 2 months. Nowadays, most of these disputes can be handled within a couple of weeks. And for the most part, they very rarely exceed 30 days. Most of this information can be easily cleaned up. And some information like maybe your current address or updating your phone number, that can almost be done instantaneously. It's pretty easy. Some things that are not on your credit report that sometimes people think are your criminal background. Anything that is related to anything from parking tickets, speeding tickets, jail time, anything that's related to a criminal background is not on your credit report. While we do have public record from courts, it's only related to something that is debt related. So like a bankruptcy, that would show up, but nothing else. Same thing with medical information. While if you don't pay your medical bill, you don't pay your doctor or a hospital or something like that, they could send that bill to collections, but it's the bill that goes to collections. We don't keep any medical information, so we don't know what doctor you went to, what did they see you for, what was the procedure. None of that information is going to be found on your credit report because it's not relevant to credit. Same thing with your buying habits or transactional data. While we may record that your balances on your Bank of America Visa card is $200, we don't know what you bought to get that balance up there. We don't know that you bought a pair of boots or something like that, right? So no transactional data, no buying habits are recorded on your credit report, and neither is your income. When a lender asks you for your income, it's shared income. It's stated income that you tell them, right? It is not on your credit report. And neither is your bank account information. I want to stop there for a second because savings accounts, checking accounts, money markets, any kind of investment, not on your credit report. But sometimes people believe when they're using their debit card, because sometimes your debit card will have, in fact, most of the time, it'll have the little Visa logo on it, right? So you're thinking, oh, this is a credit card. A debit card is not a credit card. You are not building history if you're using your debit card for everything. You're also not accumulating any debt, which is great, but you're not building credit history because your debit card is the same thing as, taking cash straight out of your savings account or your checking account. It's like a plastic check. It is not credit related. It is not a loan. It's your own money, so it's not building credit, okay? Finally, something that's not on your credit report, believe it or not, is your credit score. Your credit score is calculated from your credit report, okay? Kind of like your GPA, right? Your transcripts can feed your GPA, but it's only calculated at a given moment in time. If you calculate your GPA your following semester, it's going to change, right? So same thing with credit scores. Your credit score is calculated from what's on your credit report right now. If we were to calculate your score, if I was to check it again in a month or even in a week, it could be different information. Your credit score is different. So there's no point in keeping your credit score. It could literally change every day. Generally doesn't change that much, but there is the possibility that it could. So there's no reason to store it. We talked a little bit about the information that's on your credit report. And now we're going to talk about how long that information stays on. Remember, this is a credit history. So any account that you have that's in good standing, as long as it's open, you're still using that account. And maybe a credit card that you opened up, as long as it's still open, it will be on your credit report indefinitely. Okay. Once you close an account, whether you close a credit card or if you close an account because it's simply paid, right? So let's say you bought a car, and after 3 years, you made your last payment, that account is closed now, right? We will keep that information for 10 years after you close it. But after 10 years, eventually it does drop off, right? So if you had an account longer than 10 years, that you closed longer than 10 years ago, you may not see it anymore. Now, the good news is that negative information, so good information stays on for a nice long time, usually indefinitely. But negative information, those late payments or any missed payments or any collection accounts, those have an expiration date of 7 years. And that means that after that time, that information is removed from your credit report as if it never happened. It doesn't go to like the back end or something like that. It is gone. It's purged from your credit report. So you have the opportunity to rebuild. Even if something negative happens and you were falling behind, and maybe you have a collection account or something that's not great on your credit report, remember you're only 7 years away from having that completely removed and taken off of your credit history. But be aware here, as you can see, Chapter 7 bankruptcy stays on for 10 years. It is far more disruptive and destructive to your credit history than other things because it does stay on there longer. Notice, though, that credit inquiries only stay on for 2 years. That information purges after 24 months. Actually, it starts purging at around 23 months, to be perfectly honest. But the credit inquiries, because there's obviously a lot more of them, they fall off quite a bit earlier. And as I mentioned before, they don't have the same impact as some of the other things on your credit history. People fuss and worry about inquiries more than necessary, when the reality is that they should be fussing about making sure that your payments are on time. That's really important, and keeping your balances low. That's really important. With this presentation that I'm doing here, I want to explain that building your credit, starting your credit, can sometimes be a little bit difficult. All right. When you turn 18, you may not have any credit history. You might if you were an authorized user on one of your parents' credit cards or something like that. But generally speaking, you don't automatically get a credit history the day you turn 18. You actually have to do something to initiate it. If you don't want one, just never ask for a loan and you actually won't have one. But since we've been talking about the importance of building it, you wonder, how do I get credit history? What if nobody will approve me simply because I have no credit history? It's kind of a catch-22. I can't get credit to get credit. So how do I get credit? Well, there are a few different ways. First way, as I just mentioned before, is your parents could add you as an authorized user on their credit cards or something like that, some of their accounts. It means that you can use the account, but you're not responsible for paying on the account. So it's a pretty sweet deal. And it does help build that first account on your credit report, right? You just need that first account on your credit report to get it started. It's not necessarily your account, but you can essentially borrow the history, the good history that your parents have. If your parents start defaulting on those loans or start going bad on their loans, don't worry. At least at Experian, it stops being associated to you the second it goes bad. Because if you're an authorized user, you're not responsible for the payment. So if the payment goes bad, then you're not responsible for that account anymore. Another way you might be able to start your very first account if you're having trouble with it. Student loans are generally the first trade that's on a person's credit report, as is what's known as a secured credit card. A secured credit card is just a regular credit card that you could get issued maybe at your credit union or from your bank. But the difference is that in order to have that credit card, you secure it against your savings account. So the way it works is, let's say you have a bank account with, I don't know, Wells Fargo or any one of the banks or credit unions. You have an account with them. If you don't have any credit history, you could ask them, could I get a credit card? And they'll probably start you off with a secured credit card. So they'll give you a credit card with a limit that is equal to how much you have in your savings account. And then you say that if you ever, stop making payments or you're not paying back your bills, they can actually pay that account from your savings account. Okay. Generally speaking, it's better to have unsecured credit cards. In other words, they're not secured against a bank account, but that first one might be a secured card. Also, retail companies, Macy's, Best Buy, some of the stores, Target, sometimes different stores will give you their first retail card. Generally, there's small limits, $300, sometimes $500, if you don't have any credit history, but retailers are known for giving you your very first shot. And then finally, another way that you can help build your own credit history and even boost your score is a program that Experian has. This is not at the other two bureaus, but at least at Experian, we have a way that the consumer themselves can actually start building and improving on their credit history by giving what's known as consumer permissioned data. So as I said before, lenders are the ones that send us the information to build your credit history, right? Well, we found a way to say a consumer can start adding information. So if you're familiar with the credit report, you've seen your own, you probably noticed that your cell phone provider perhaps isn't reporting your good payments or the payments that you make on time, but they sure will report you if you don't pay on time. Right? If you go into collections or something like that, that will show up on your credit report, but the good parts weren't. So we're allowing you to actually show us that you have been making your cell phone payments or utility payments on time, and we'll use that to help boost your credit history, boost your score. Generally speaking, we're finding that people who take advantage of this program can see between 10 and 15, I've even seen it up to 25-point jump in your credit score, depending on how old you are and how thick of your credit history is really. But one of the great things about Experian Boost is that it's 100% in your control. By the way, it's also free. There's no cost to this. You decide if you want it. You could try it out, and if you, for whatever reason, didn't want it anymore, didn't like it, whatever, you just wanted it off, you can remove it. Because you drive it, you can add it and you can remove it. But for the most part, I've been talking to a few people. It's a pretty simple process. The one thing I will caveat it though, in order for you to add your utility accounts or your telecom, it does have to be in your name, right? You can't improve your score with somebody else's account. But once you do have your cell phone, let's say in your own name, it might be worthwhile for you to go and check it out. Just go to experian.com/boost and get more information. Again, completely free, completely within your control. All right, let's talk a little bit about a credit score. So everything we've talked about so far is your credit report, right? The long history. Now we're going to flip to credit scores because for the most part, most of you know what a credit score is. You've seen that, you've heard about it. You might know of FICO or Vantage Score or some of the other scores that are out there. You're probably familiar. If you ever heard of something called Credit Karma or credit.com, you will know that these are sites that kind of give you your credit score. Sometimes if you have a credit card, I know that Discover, Wells Fargo, and some of the other major credit card issuers out there, they'll actually give you your credit score every month in your bill, right? They'll say, hey, look, here's your updated credit score. So getting your credit score is something that most people are very familiar with, but they don't necessarily understand what it is and how it's calculated. And that's what I'm going to talk to you about. So a credit score is simply an algorithm. It's a mathematical formula that looks at the information in your credit history and uses that to come up with an algorithm that tells us what is the chance, what is the probability that any given consumer is going to default. Default is defined as going 90 days or more past due on an account or a charge off, right? Basically, you've stopped paying on an account that was due, and that lender had to charge off your account or send you into collections or do something, if it's a car, they might repossess the car, that kind of thing. That is the definition of defaulting. So what a lender wants to know is, given everything that's in any person's credit report, how likely are they to default? Are they very likely or are they very unlikely? And really, it's represented in a numeric formula. We have a scale, so people who score very, very poorly, like at the bottom end of the scale, a typical scale is 300 to 850. If you score in the 300s, 400s, or 500s, you usually have a very high likelihood that you're going to default, right? Maybe because you've defaulted before, maybe because you don't have a lot of history, maybe because your balances are really, really high, or you filed bankruptcy or things like that, right? Other people who have pristine credit histories always pay their bills on time, always keep their balances low, keep a nice mix. Those people are very unlikely to default. And so their score is going to be better. And you always want a better score. I'm not going to say higher score. Most credit scores have a low is bad, high is good, but sometimes you will see some credit scores that are actually inverse. There are a few credit scores out there in the market where the higher the score, the worse. They're rare, but you just want the score to be on the better end of whatever the scale is. That's all you need to know. All right. I'm giving you an example of a score. This is Vantage Score 3.0. It is a commonly used generic credit score that lenders use in order to determine whether or not you're going to default. Okay, that's all it is. It's just your credit score. Vantage Score, just like FICO scores and some other credit scores, they each have their own special algorithm. They each have their own formula. But generally speaking, since all of these scores are kind of looking at the same thing, they're basically deciding whether or not you're going to default. They all generally work in a similar way. And what that means is one of the strongest indicators of whether you're going to pay your bills on time is whether or not you paid your bills on time in the past. So your payment history. Do you make payments on time, or do you make your payments late, or did you ever stop making your payments altogether? That is the most impactful aspect of your credit history. That's the thing that impacts your score the most. So if anyone wants to ask me, how do I keep a good credit score? How do I build a good credit score? Number one, first and foremost, pay your bills on time. Don't even accidentally get behind or get there 30 days late, because that will impact your score, and it will impact your score for a while. So set up automatic payments if you need to, even as long as you can pay your minimum payment. If you can pay more, great. But even if you can't, if you make your minimum payment, at least then you'll get your current for the month, and your payment history will be, pristine. But the reason I'm showing you this little kind of pie or donut shaped graph is because even though payment history is very important, probably the most important single aspect, it isn't the only thing. As you can see here, there are other aspects that also impact your score. Somebody might say to me, why don't I have a perfect score? I've never been late. It's like, well, because being late is not the only thing that impacts your score. Other things that impact: how much debt do you have? What are your balances like? Are you getting close to your limits? Utilization, that's what utilization means. How close are you to your limits? Let's say you have a credit card that has $1,000 credit limit, okay? If you charge up $900, you are very, very close to your limit. You're almost maxed out. That's not looking good. If you keep your balances in the low percentile, like less than 50%, less than 30%, you're doing really well. You're not using up all of your available credit. That's a good thing. So you lower the utilization, the better. But other things like depth of credit, that means how much credit do you have? Do you have 1 year's worth of credit history? Or do you have 30 years worth of credit history, like I do, right? I've been around for a while, so I've got a really thick credit history. Those are all important aspects. But see this thing up at the top where it says 5% recent credit? That's your inquiries. Remember how I told you that inquiries, they do have a slight impact on a score, about 5% for the most part, give or take a little, right? While it does impact, it is by no means the most important thing. So don't fuss too much about inquiries. Fuss much more about payment history, making those payments on time, utilization, keeping your balances low. You do those three things, your credit score is going to do very well. Now, I mentioned that there are many, many different scores out there, hundreds of them, in fact. And it's very difficult to establish what is your credit score. You might get one credit score from one company and a different credit score from another company, right? And so that kind of leads to, well, how do I make sure, how do I improve my score if they're all different? And the way you improve your score is something called risk factors. Risk factors or score factor codes are reasons that are given with every score. So anytime you get a credit score, or if you're ever turned down for credit and they tell you that they used a score in order to make that determination, they have to give you your risk factor keys or your, codes. Or if you ever pull your own credit score, it will tell you what are the 4 main reasons that your credit score was impacted, that it was lower than it could be. And they are in hierarchical order. And that just means that the top reason, the one that's number 1, is the reason that had the most impact. Number 2 is the one that had the second highest impact, 3, third highest, etc. So if you want to improve your credit score, look at your factors, starting with the top one, and do the opposite of what it's saying. If the reason your score is lower is because you have a late payment, then go back and bring that payment up to current. If it says your balances are too high, then go and pay down some of your balances. If it says you don't have enough credit history, well, that one, you just kind of have to wait for that one. Just time fixes that one. But if you have, something else, maybe it'll say you don't have any credit cards. That's the reason why your score is low, is because you don't have any credit cards. Well, then opening a credit card will help that. And then every time you address those reasons, the next time you might have a different reason. And just keep addressing and doing the opposite of what the issue is. And over time, your credit score will improve. Any credit score will improve in that manner. All right, so let's talk about kind of a summary. What are the 10 basic rules for managing your credit? We've talked about how to get credit, what credit is, but let's talk about what you need to do to manage that credit report, because you need to check it and keep on top of it. The first thing is very simple. You got to establish a credit report. Go out there, get a loan, get something on that credit report to get it started. Okay. Second, and probably most importantly, always pay as agreed. Whatever that is, whatever that agreement is, pay according to that. If you run into trouble, if for whatever reason you don't have the income you need to pay those bills, a lot of things are happening right now. We're going through a very difficult economic time right now. People are being affected by COVID. People don't have jobs anymore in some cases. It's very, very tough times. Talk to your lenders, work something out with them. There are options, whether it's a student loan, whether it's a credit card. There are options right now for you to work with your lender where they will actually maybe even stop your payments for a little while, right? Until you can get back on your feet. But don't just stop paying, or don't, just ignore it. Deal with it, and you can actually keep your credit report in good condition, even if, times are getting tough. Another thing that you will want to do is you will want to at least at some point get a credit card. While student loans and auto loans and things like that, installment loans are good to have on your credit report, they don't show how you manage money. A credit card does, because it's a revolving type of trade. Many lenders are actually looking to see how you pay and how you keep your utilization on your credit cards, how you're managing that. So getting a credit card, if you don't have one, you will see that pop up often on your credit risk score, from your credit score, the risk factors. You will see that pop up a lot because it is something that a lot of scores are looking for. When you're closing accounts, just be aware that as soon as you close an account, your utilization ratio changes. What that means is, remember, utilization is what your balances are to your limits. So your limit is $1,000. Your balance is $300. You have 30% utilization. Well, if you close accounts, that utilization goes, that limit goes down to zero, and that's going to impact your utilization. So just be aware that when you close an account, that your utilization will change. So you're also going to have to pay down those accounts, or else your score can be impacted. Be careful when you're opening credit. Don't open a lot of credit in a short period of time. If you want to have 3 credit cards, great. Maybe space them out with a few months, in between is better than opening them all up in 1 month, for example. But don't be afraid to do something called rate shopping. When you're going to go out and get your car, for example, you're going to get a car loan, or even, eventually when you get your mortgage, you don't want to take the first offer that comes along. You want lenders to compete for your business. So you're actually going to apply to many lenders at one time. Don't worry about that, because even though you are essentially going to get 3, 4, or 5, hard hits on your credit history for inquiries, credit scores understand that when you have multiple auto and multiple mortgage inquiries in a short period of time, it's not that you're buying 5 cars, it's that you're buying 1 car, but you wanted to check to see the rates, the interest rates from 5 different lenders. So they roll those multiple inquiries, they roll them into one. You can still see it, the individual ones on your credit report, because you're going to see the history, but the score only sees one of them. So don't worry about rate shopping. For the most part, everything on your credit report is handled by time. Eventually, every negative thing will fall off. Over time, your credit will improve, get bigger, get better, get thicker, have more records on there. So time is very, very important when it comes to credit. In all things, demonstrate stability. Make sure you're making your payments regularly, and that you're showing stability in your credit history. That's what lenders are looking for. Whenever you take out a loan, make sure you have a plan on how to pay it back. It may be great that you're given a $20,000 credit line, but you got to make sure that you have the income or the resources necessary to make those to make those payments. So before you take out a loan, before you use that credit card, make sure you have a way to pay that back, and use credit to work for you. Get good loans. Sometimes, later on, as you get a great credit score, I've got one where I can go and get a car for no interest. It really does help me. It's fantastic, because I've got such a good credit history, such a long, thick history, that auto dealers they go crazy trying to get me to get my car with them. So they offer me 0% interest loans. So it's great. You don't get those initially. You have to have a good reputation, a good credit reputation, in order to get those really, really great deals. And of course, share your knowledge. Whatever you learn about credit history, share it with your family members. We have a lot of information out there at Experian that you can use to share this information, right? To share the knowledge of what you've learned on credit history. I mentioned before that you can get your free credit report from a website called Annual Credit Report. This is a government portal that allows you to get one free credit report from each of the 3 bureaus. Normally, it's once every 12 months. So once a year, you can go to each of the 3 bureaus and get a free credit report. No cost at all whatsoever, no strings attached, just get your free credit report. Because of COVID and the CARES Act, we've changed that. So until the end of March, so right where March and April kind of transition over 2021, you can actually get one free every week. And that's kind of a COVID situation. So until the end of March, you will be able to go to this website and get one free credit report from each of the 3 bureaus once a week if you wanted to. And the reason we're allowing this is so you can, especially if you've asked for an accommodation, if you've asked your lender for a payment holiday or for a forbearance, this allows you to go back in and check to make sure that everything is set properly. If you've asked for an accommodation, your lender cannot mark you as 30 days late or 60 days late or whatever. But if you simply stop payments and you don't work it out with them, then they can actually, even if you are affected by COVID, if you don't let them know, they won't know, and they can mark you as 30 days or 60 days late, okay? You can also telephone this line, but honestly, the website is probably the easiest way to access it. But you can actually, there is a way for you to get it through the mail if you wanted to, or you could call it in as well. Do be aware that when you're getting your free credit report, there is an option to add a credit score. Remember that the score is different. There is a price to this credit score. Only the report is free, not the score. You don't have to get it. It's an option. You know, you could probably get your free credit score in many, many different places. So you don't have to get it from this site. It's not required. Just, you know, sometimes people say, well, isn't it free? Well, the report is free. The credit score is not free. Besides the annualcreditreport.com website, where you can get your credit report, Experian has a lot of different websites, and I'm putting them down here for you, where you can go and get just, I mean, a ton of information. I've got brochures, we've got videos, we've got blogs, we've got an advice columnist. Rod Griffin is our credit advisor at Experian. We have so much information that's specific. So for example, let's say you have some questions about your student loan specifically, go there. Let's say, I don't know, you have a life event, you're graduating college, you're starting a business, you're getting a divorce. I mean, there are a lot of things that can happen that will impact your financial situation. When those things happen, make sure you take into consideration how it's going to affect your credit. People don't realize this, but when you get a divorce and you're splitting up accounts, that is a major impact on your personal credit. And it's not handled through the divorce court. Now, people think that, oh, well, the judge said that I don't have to pay for this car. Yeah, but if your name is on that loan, you do have to pay for that car, even if it was your ex that ended up with the car. You have to take care of these things. You have to make sure that you understand all of that information. Tons of it is available on these sites. Just go out there, you know, poke around a little bit. We even have a sample credit report. So for example, if you've never seen your own credit report, or maybe you don't have one and you're just curious to see, well, what does it look like? Go to the consumer education site, and on the right-hand side, it'll say sample credit report. It'll actually step you through each aspect of a credit report with a little bit of an example. And again, lots of videos, presentations, etc. Let me see here. Oh, good. That was the last of it. So did we get any questions so far?
No, we have not had any questions. I did put the annualcreditreport.com link in the chat as well.
Good.
And I wanted to make two quick notes for everyone that's left. I know I'm sure folks had to drop off at 5 o'clock, but this session has been recorded. It's going to take us a couple of days to get it up on our website, but the goal is to have it posted on that same presentations and events page that you went to sign up. Additionally, this session, the basic whatever understanding credit 101, will be offered again this Tuesday the 8th from 4 to 5. And then just to plug the next session, the advanced session is next Thursday, the 10th from 4 to 5 p.m. Sign up for all of those is on that presentations and events page that we've been emailing out on a regular basis. So just wanted to plug those two. If you missed the beginning, the recording will be posted there shortly. We do have one question.
Sure.
Does credit work the same way for student visa holders? So for my assumption is we're talking about students on an F1 visa.
Yeah, no, absolutely. Citizenship is not a requirement for getting credit. Now, each lender has their own rules, okay? So they might require different information. I'm not saying that every lender has to give you credit, but getting a credit report is not dependent on your citizenship status.
Great. All right. For those of you that are still here, are there any questions? We've still got a bunch of folks. So
I'd be happy to say.
We've got time if anyone wants to either unmute and ask a question or ask it privately in the chat, and I can anonymously ask your question to the group. Either way.
No questions too small.
Right.
Hello, I actually have a question. Thank you. That was great, by the way. If you have something in collections and you you settle it for lesser than the amount,
Yes.
Does that result in differences in your credit score? Like if you paid the full amount?
Generally speaking, settled versus paid completely, it actually is the same. It's settled. It means it's taken care of. Some scores, some of the newer scores, not the old ones like the old FICOs, but some of the newer scores will actually disregard paid collection. So once it's been paid off, it doesn't matter how much you paid, it just means it's no longer due. Once it's been marked as paid, the score completely ignores it as if it didn't exist. So
Okay.
if you can settle or pay off some collection accounts, generally speaking, your score will improve. There are some rare exceptions where it doesn't, but for the most part, it's definitely an important thing. And having paid collections is definitely going to look better from a lender standpoint because it says that you took care of it. And also, just this is a little kind of one of these tips and tricks. Medical collections are one of those things that show up on your credit report that, quite honestly, when they are small amounts like a co-payment dispute, right? You thought you paid it, your insurance was supposed to pay it, somehow it made it onto your credit report and it went into collections. Experian is going to take all that stuff off because it doesn't belong there. It's not a loan, it's just something that showed up on your credit report. So if you do have collection accounts, especially if they're medical collections and they're small dollar amounts, less than $50, they're going to be cleaned out. So don't worry about those.
Anecdotally, having processed almost a decade's worth of Graduate Plus loans, the number one reason that I've seen students denied for a Graduate Plus loan is that it's a medical bill that went to collections.
Right.
You can contest that and then reapply through federal student aid. And in my experience, the vast majority of students who appeal for a medical bill, when you pay it off and then you appeal it, the Graduate Plus loan is then approved.
Exactly. Good.
So we
That's
do
good to know.
have, there's one other question that came through for the Experian Boost. If you start that and then you decide to cancel it, does that and how would it affect the credit score?
Well, if you do boost your score, and let's say, I don't know, let's say it raises your score 15 points, all right, and you immediately remove it, and by the way, you can actually just undo it. It will just simply take your score back to what it was before. So is it possible that your score could go down? Let's say if you took it off a year later? Yes. I don't know exactly how much it would drop because now your credit report looks different, right? You might have other things on there that balance it out. But generally speaking, if you remove it and you saw an increase when you added it, you might see a decrease about the same amount when you take it off.
Okay. If your income isn't on the credit report, how do lenders verify your income when looking at your debt to income ratio?
There's one of the tricks. They don't. It's completely based on what you tell them. Now, I will tell you that if you say, I make $200,000 a year, and they look at your credit report and you've got a single credit card, they're probably going to know that that's not quite true. And they might ask you for what's known as verified income, where you actually have to submit your pay stubs or maybe your 1040, your tax returns, some sort of proof. But for the most part, when a lender is asking you for your income, it's what's known as stated income, and they have to take your word for it.
All right, we don't have any other questions coming through, but usually when I say that, one or two questions comes through. So,
Okay.
All right, well, so a couple just housekeeping notes. If any of you have any follow-up questions, please reach out to your respective school email. If you're on the medical campus, the OSFS-SDM or -med, GMS for those of you SPH. If you are from a different school, because I know we've got some law students and whatnot, you can email me, dfmurphy@bu.edu. Again, Veronica will be doing this presentation again next Tuesday, and then the advanced session on Thursday. So if you missed any of this, you want to come back, you can sign up again. We have the capacity, right? There's no dedensification necessary. So, all right, I don't see any other questions, so I just want to thank you, Veronica, for doing this presentation. As usual, I learned a couple of things that I will now go ahead and try to implement. And thank everyone who joined us and stayed with us till the end.
Thanks, everyone. All right, bye-bye.